What's up, losers and substance abusers? I'm coming inside you with a brand new video today because, well, folks, the Fed is about to cut rates again. Yeah, Jerome Powell is basically the guy at the happy hour who finally decides to buy around, and the bartender goes, sorry, drinks aren't half off for you. Because here's the fun part. Mortgage rates, they don't always follow the Fed. Sometimes they actually go up, which is like your doctor saying, good news, you lost weight. Bad news, it's because your leg fell off. So here we are. Mortgage rates just dipped to 6.58%, the lowest since October of 2024. Buyers are finally thinking, maybe I can afford that house with 2 bedrooms and a roof. But hold on, because everyone's sitting around waiting for September when the Fed is supposed to cut rates again. And every mortgage broker in America is pulling their hair out because their clients keep saying, no, I'll wait. Rates are going to go lower. And the brokers are like, buddy, it's already priced in. The market knows what's coming, and you're not Warren Buffett. You're just some guy refreshing Zillow in his underwear in his living room. So here's the thing. Mortgage rates don't always take marching orders from Jerome Powell. They don't even RSVP to his press conferences. Mortgage rates are tied to the 10-year Treasury yield. That's basically the bond market's mood ring. So when you hear the Fed is cutting, that doesn't mean your mortgage rate payment shrinks. It means maybe credit cards, home equity lines, and adjustable loans get cheaper. But the good old 30-year fixed, that baby dances to its own DJ, and sometimes the DJ is drunk. You remember last year, Fed cut rates, mortgage rates went up. Like, congratulations, America, your government's trying to help, but your bank just raised the cover charge. Right now, traders see about an 85 to 90% chance of a rate cut in September, which means it's basically baked in. Mortgage rates have already come down in anticipation. That's why we're at 6.58% today. So if you're waiting for September like it's Christmas morning, hate to break it to you, Santa already came. He left you 6.58%. That's it. Stop waiting for him to bring you a PlayStation 6. You're getting socks. Now, could mortgage rates move before September? Absolutely, because it's not just about Powell. We've still got new jobs data, inflation reports, and the always sexy producer price index. You know, the data that no one cares about until suddenly your mortgage goes up $200 a month. If August hiring comes in weak again, mortgage rates might slide lower. If inflation heats up, rates could spike. Basically, the next 4 weeks are a blind date with the bond market. And you're hoping they don't order lobster, by the way. And here's the bigger picture. Even if rates come down a little, the housing market is still a horror show. Prices are near all-time high. Rents are up 30% from 5 years ago. Affordability is so bad that Zillow should just rebrand as LOL. Shelter costs rose 3.7% in the last year, and that's still the single biggest driver of inflation. So yeah, Powell can cut rates, but until home prices stop acting like they're trading on the NASDAQ, nobody's exactly moving into their dream house. So you know what cracks me up? Home buyers waiting for rates to really drop before buying. Newsflash, you're not getting a 3% mortgage again. That ship sailed in 2021, and it hit an iceberg called inflation. Rates in the mid-sixes might be the floor for a while, and waiting for them to fall further is like waiting for your ex to text you back. It's not happening. And even if it does, you won't like the terms. And let's not forget about the politics. We're in an election season, tariffs are flying, job numbers are shaky, and Powell's trying to thread the needle like a drunk tailor. If the Fed cuts too little, markets panic. If they cut too much, inflation spikes. Meanwhile, mortgage rates are like, yeah, thanks for trying, we'll just do our own thing. It's like Congress. They hold hearings, they yell, they posture, and at the end of the day, your rent still went up. So here's the moral of the story. Don't expect Powell to be your real estate agent. Mortgage rates are complicated. They're tied to bonds, investor demand, and about 1,000 things you'll never control. But hey, look on the bright side. At least they're not 8% anymore. You could lock in today at 6.5%, or you could keep waiting for Powell to save you. Just remember, Jerome Powell's job is to fight inflation, not get you the craftsman bungalow with the nice yard. Because at the end of the day, mortgage rates are like cats. They don't do what you want, they do what they want, and you just pay for it. So yeah, the Fed cutting rates, mortgage rates, they might not care. And if you're waiting for them to drop to 3% again, you'd have better luck waiting for Congress to pass a budget on time. Good night and good day, everybody. I'll see you in the next video. Thanks for hanging out. Make sure you subscribe, like, and hit that bell notification so you never miss a Trades and Gains video. See you guys in the next one.